12 to the Asian session model. This is episode 12 to the Asian session library. Once again, another example here with UJ using the Asian session model. We're not going to waste any time. It's just like all the previous episodes I've been showing. With that, let's jump right into it. We have this gray area, which is going to be our New York lunch session. We're not going to trade during this time period because it's most likely going to run into consolidation. So we're just going to type that out because some people had questions about it and we're a little confused, and I'm just going to write it out on here. So it's 12 p.m. to 8 p.m. and that's your New York lunch. Then we're going to use this session to help us trade the next session, which is going to be the Asian session, which is going to be from 8 p.m. to 12 a.m. And all these times are in New York Eastern Standard Time. What we're using is the buy side and sell side liquidity that's available in this session to help us gauge what we could potentially find during the Asian session. So we're going to find any of the buy side and sell side liquidities above swing highs and swing lows. So we have a swing high up here. So that's a swing high. And we also have a swing high just below that as well, right here. And we're taking the ones that are unbroken here. And we also have one right here. Now I know that looks like an equal high. These highs here are double top here, but it's not. If you see here is 145.737. And then on the right is 145.734. So this high is higher. And then there's a lower high on the left and a lower high on the right that makes that swing high formation. Then below that, we have the sell side liquidity, which is below a swing low. And we have it all set up at this point. So we've identified where our buy side and sell side liquidity is within this time period, 12 to 8 p.m. Going into this session, we're going to see whether or not we purge one side and revert to the other side. So some type of turtle soup setup. If we run buy side, we're going to look for a short opportunity to go back down to sell side. If we run sell side, we're going to look for a buy opportunity, a long opportunity to go back to buy side. So if we play it forward, you see here, price runs up and takes out that 15-minute swing high here. We're going to mark off the opening price here for the session because, in my opinion, I think it's really crucial to understand where we are during the session. Are we above the opening price or below it? That's going to be our natural indication for overbought and oversold. Once price gets above that opening price, it's overbought. Once price gets below it, it's oversold. So premium above, discount below the session's opening price. So at this point, once we break that 15-minute swing high, I then start to hunt a setup. I now am looking for a short opportunity because we're in a premium and we just recently broke a 15-minute swing high. I personally like to scale down to the 1 minute, but you can use the 2, the 3, the 5 minute, something lower than the time frame that we were once on analyzing the chart. So we went from the 15-minute down to the 1 minute. We can see prices above the opening price here. That's the start of the Asian session here, and that's that 15-minute swing high. We have a fair value gap that forms here. That's the fingerprint that I'm looking for to find the short opportunity. I personally take the very first one, or you can wait for the one that creates a market shift, a fair value gap through a swing low, wait for price to trade back up into it, and then go short. Normally, I like to take the first one because at times, the first one may be the only opportunity to catch that short. Here, what I would do is, I would wait for price to come back into that range here, as you guys can see there. So we got that 15-minute, so we'll zoom in a little closer so we can show everything. So that's that 15-minute swing high, and there's a buy side liquidity that's just been rated here, and then we have a 15-minute swing low. So now we're looking to go from above here, potentially back down here. That's the opportunity. The market has granted us an opportunity to go short, and that's what I'm looking to do. I'm looking to go short here at that candle's high or that fair value gap. Let me just adjust that here. So right there. And I'm going to have either a 1-to-1 setup. Most likely I'm going to stick to a 15 pip SL or a 20 pip SL, depending on the risk parameters. So let's say I go for a 15 pip SL. And we go for a 15 pip TP. So it's a 1-to-1 scenario. Risking $1 to gain $1. 15 pip risk, 15 pip reward. the fair value gap is forming as well above the 8 p.m. opening price. Now, that's not to say that very first fair value gap that you find is going to be the one that causes price to break down or trickle down. There may be other fair value gaps after this that form that can also be your short opportunity. Let's say you came late to the session and you happen to open up your phone and you do the breakdown and follow the steps, and then you realize, oh, there's a short opportunity, but what do you have to do? Wait for the next fair value gap or wait for the next PD array that you like to go short into. Play it forward, you see price trades into it, so you eat some drawdown. You get another fair value gap here. So we're just going to move this over. You can see how there's a very small fair value gap from this candle's low to this candle's high. Right there in between, really tiny. I'm not going to mark it off, but it's right there. You can check your charts too. Owanda is the one I'm looking at. UJ Owanda. Play it forward, price trades into it again. Starts to break down. Another fair value gap here, right? From this candle's low to this candle's high, another one forms above the 8 p.m. opening price. Keep in mind, the target is this, that 15-minute sell side liquidity below the 15-minute swing low. And we play it forward. You can see we quickly get to that. So that's personally my favorite model to trade with intraday, especially when it comes to the Asian session model. Now, this is very familiar to the New York model and the London model, but specifically here, we're talking about Asian. So I'm using yen crosses. That doesn't mean it won't happen to other pairs that are crossed with the dollar, like AU, GU, NU, and EU, or even gold and silver. You'll find at times that the market will give these setups. It's very ideal for a trader to sell above the opening price after breaking a high. So that's the whole point here. The idea is we broke the high and we purged it, and now we're reverting back down to the sell side liquidity. It's a very simple approach, in my opinion, that you can teach to anybody at any level of trading. You can teach this to your children. You can teach this to your nephew, your niece, your brother, your sister, whoever it may be. I believe this model is straightforward and consistent enough and gives someone some discipline and some rules to follow that isn't overcomplicating the process of how do I find the entry, how do I go long, how do I go short. I'm telling you the steps here. And as you can see, you get that one-to-one successful trade. Now, if you can find this 3 times out of the week, 4 times out of the week, maybe 20 times out of the month, whatever it is, how many times you're able to find this, that doesn't mean you stop yourself short, because there are going to be opportunities where you can either compound, have a trailing stop. Let's say you get the one-to-one and you're still holding on, you scaled out here. You can still have a trailing stop. And let's see where this trade does take us. So we're just going to go on the higher time frame just so that it plays out a little faster for us. We'll play it forward. And we can see that 1-to-1 could have turned into a 4-to-1, a 3-to-1, or even more at times. Now, like I said, if you have a trailing stop, you may be potentially stopped out. You see how price comes all the way back up to entry as well. Came back around that fair value gap here and continue to break down. And that's what we had there for the Asian session for Thursday. And then going into Friday, you can see how there was a potential continuation to sell off here, but there was some recent pullbacks that might have stopped you out if you had a trailing stop. However, you were still able to capitalize on getting that 1-to-1 and getting a successful trade, getting that 1%, that 2%, whatever you're looking for per trade, you got it. And that's simply the Asian session model once again. Hopefully this was insightful. Peace.